What's going on, YouTube? It's TerrenceRe. It's gonna be a little bit of a different video. I'm gonna have a little bit more fun today. Um, I'm a real big football fan, so I'm gonna talk a little football and actually do a little scalping while I'm talking. If we get some moves in the market, so you can see I got the mini S&P futures pulled up. I think I just missed the move to the upside. But if I see it come back down and do a little retest, y'all might see me do some live trading, have a little fun. But we're gonna do a little football talk. I watched a lot of football this weekend. Um, First, we're gonna talk about college football. Obviously, my opinion is that Alabama is the best team in the nation. So that's my number one team. Just watching them. Alabama is good on both sides of the ball. Uh, I mean, they solid in all facets of the game. As far as I don't know, I was joking at work with one of the guys at work. I said, "Man, Alabama must be growing these guys." You know it seems like guys go to the NFL, some more people come along, or they have somebody come right in and fill in. They ain't missing a beat at quarterback. Um, in my opinion, I don't know if you can upgrade. I say they ain't lost a step, because you got a guy who can make all the throws, and now you're gonna put pressure on the defense because he can move with his feet. When you have a quarterback that can move, and you got to account for that. You got to spy him in the passing game. Whenever if he carries out the fakes on the run plays, the defensive end got to stay at home. He can't crash down the line. He holding the backside. It's a lot of stuff that go into when you got a mobile quarterback. He make all the throws. And when he's scrambling, he got his head downfield, looking to make you pay if you come up. They got good wide out speed at the wide receiver, big tough physical back. Offensive line is physical. They just pound you on both sides of the ball. Solid special teams. That's number one team. I don't even think it's close. I do think Georgia got a good football team. That's my number two. Georgia might have the best defense in college football. Uh, so we'll see. That'll be tested, I think, this week. We'll see what Bo Nix shows up this week. If we get the Bo Nix that played last week, he played lights out. He gave it his all, scrambling, making plays with his arm. If Georgia get that Bo Nix, it's gonna be a tough game. Just because like I said, I like mobile quarterbacks. It's a dynamic. You can't account for a quarterback breaking tackles, because even you can have the right play dialed up and he can make a guy miss, and now you got a busted play, and then he hurt you with his arm or with his feet. And I think we're gonna need every bit of that to beat Georgia. Georgia's defense is just that good. Kirby Smart might be, he came from excuse me, that Nick Saban school of coaching. So he tough. He gonna play. His defense is gonna be tough. I mean, so Georgia playing lights out on the defensive end. They run the ball well. Good offensive line. They got good running backs. I like Zeus. I don't know why he don't get more carries. I've been saying that all the time. They be trying to spread it around. I'd be like, man, pound that rock, man. That guy got to get 20, 25 carries every game. But they got good guys behind him, but he that dude. He really that dude. The only thing with Georgia that I'm gonna say, and pretty much, and Georgia fans know it for the most part, is that quarterback. Like they'll get you can get to that tough game, but to me, in my opinion, you gotta have quarterbacks that can make big plays in those games, because you're not just gonna be. I don't think that Georgia gonna be able to line up and just run at Alabama. That's what it's coming down to. Yeah, of course, they got to get past Auburn. They got to get past Florida. Florida gave Alabama all they wanted. They gave them all they wanted, and then they turned up and lost it last week. But Kentucky may be that good, or maybe Florida came in off of a little of a letdown. I ain't gonna take nothing away from Kentucky though. They playing solid football. So my thing is this: with like I said with Georgia, I know JT Daniels has been hurt. I don't know if he's gonna play this week. I hadn't paid attention to what they said. I know last I heard, it was up in the air. He I think he got like a lat muscle, something to do with a lat muscle or something like that. Um, but I hadn't seen, in my opinion, when they I hadn't seen him really play lights out. He's played decent, and I don't they don't throw the ball well enough to me. Like I watched that Clemson game, and Clemson having a down year. I just feel like if Clemson could have made any plays on offense, which they couldn't, credit to Georgia. But I mean, that game, Georgia scored that one touchdown on defense. You know, I just don't see how you can get in. You're not gonna hold Alabama to 3 points. I don't think you're gonna skunk Alabama because they can hit big plays and they can hit them in the passing game or special teams. So my thing was always been with Georgia for the past few years. If you get them down by 14 points, 10 to 14 points, their whole game plan got to change, right? So you can't toss sweep right, toss sweep left. You got to drop back and you got to complete passes and hit big passes hit passes in the passing game. I'm not confident that they can do that right at this moment. So, but I still think their defense is good enough to where they can just run the ball, play good defense, and not turn the ball over. They can still win, get all the way to the SEC championship. I just wouldn't pick them against Alabama. Alabama, if you go up and down the roster, they're gonna be equal at every position except for quarterback and wide receiver. Bama got some stars at wide out, and their quarterback is lights out. He gonna step when they step on the field. Their quarterback would be the best player on the field and probably one of the best athletes on the field. So you just can't blitz a quarterback like that. It's tough because once he breaks containment, then he gonna put pressure on the defense, throw the ball over your head. Number three, it's just gonna change. You got Penn State and then you got Iowa. You can take either one. I don't really think it matters because they playing this week. I think, if I'm not mistaken, Penn State plays Iowa, so one of them will be knocked off. So I don't even think you have to have that discussion. I have not seen Iowa play. I have watched a lot of Penn State. Penn State is Penn State. They be decent every year. They getting better play out of their quarterback this year. Wide receivers making plays. And they beat Auburn, and that was a good game. That was a tough game. So I think they should be number three just because of that win. We're gonna see what happens coming up this week, and then coming in at number five. I guess you got to put Oklahoma there de facto. Oklahoma just don't play no defense. And they ain't played defense in the last 10 years. They'll score some points. I just don't see Alabama. I don't see Oklahoma being able to beat an elite. I don't think they'll be able to slow anybody down, and it's kind of hard to win when you got to outscore everybody. Defenses can keep you in the game. Most of the time, good offense beats good defense, but they defense on their end is like, in the past, it's been like Swiss cheese. I think they play Texas this week or coming up pretty soon. So we'll see. We'll see what they look like, and that's my five. I actually, you know what? I actually would put Cincinnati in that spot and move Oklahoma. Cincinnati tough. And people gonna say because they ain't playing in the big conference, yada yada yada. They got 2 wins against Power Five schools in Indiana and Notre Dame. And people say, well, Indiana having a down year. It's still a pretty decent team, maybe, but that Notre Dame team is good. A lot of those guys in that Notre Dame game going to the NFL, whether you like Notre Dame or not, and they're not my favorite. I don't really care for Notre Dame. I'm glad Cincinnati won that game. A lot of that the coach for Notre Dame used to coach Cincinnati, and the way he left the program in basically in mid-season was kind of, I didn't like that, so I was pulling for the Bearcats. That was a great win. I'm telling you, they got a game quarterback. He gutsy. He mobile. He can run. He can spin it. He made a throw in that Notre Dame game where he hit the tight end down on a seam route. Stupid throw. I'm talking about crazy. He threw him open, and I'm talking about put it right on him. He's they got a gamer at quarterback, good backs. They play solid football all the way around, defense, everything. They solid. They need to get that get his head right. He missed a couple field goals in that game. That game wouldn't have been as close as it was. He would have knocked them field goals through. So hopefully, they'll get him back mentally and get that rectified. So I'm gonna put Cincinnati at 5, and Oklahoma gonna go at 6. Oklahoma just don't play enough defense. You got to play a little bit of defense, and they just. Yeah, I'm not with outscoring people every game, and so that's what my little college football talk. I'm gonna start doing that a little bit more. Give you guys my takes. I'm gonna do another video later on the week, and I'm gonna go over these games. I'm gonna pick them. Do the best I can to pick them. Pro football talk. I'm gonna say that for another video because that'll make it a long video. Because I do want to get to some charts. And everyone that you tune into my videos, you're gonna always get something for trading. I'm gonna talk about some trading on every video, but I'm gonna do a little football talk too because I love the game. So that's a little bit of fun, for me. So I guess we're gonna talk a little bit about do a little bit of Facebook talk. So Facebook is I'm gonna pull up the Facebook chart. Why this is Facebook, as you can see now, Facebook is oversold. If you're looking at this chart, you got it. It just crossed into oversold territory today. It's down off of its high of 384 down to 326. So you got a nice move. The IV rank you see up here on my screen, IV rank is 59. So you can do some premium selling. I wouldn't look to buy the dip. Now, if you're looking, now I'll say this. Now, if you're saying you want to get a quick pop, right? If I bought it, I would not hold it long term. You might get just because it's down so much. And let's look at, so you probably got some support right here. See where at this low went up, pulled back, and then took off. So you may have some support right in this area right here. So it's not a bad area to get long. But when I say get long, I'm not saying get long to hold long term. Maybe you want to scalp intraday, maybe for a week or so. But I'm telling you, I don't think this down move is over. So I'm saying you could probably get a pop between sometime this week, right around in here, and it may come back up and test this where you got this gap at, right? You may even get it to go up in here. They may come up with some news to find a way to justify it. Well, like I said, you don't really have to pay attention to that if you don't want to. Of course, today they had I seen on Twitter. I don't know. I haven't been paying attention to all the news. I pretty much get my news a lot of the time from Twitter. And they had something on there saying that they had been hacked. So with that, I don't think that they've been had a lot of bad news over the past couple of weeks. So the stock was due for a downturn. So I really don't care about the news per se. But so you may get a little bounce. They may come out tomorrow, say they got the issue fixed. It won't happen again, yada, yada, yada. And people will come in, or the algos will hit it. And you may get a little retracement. I would sell every rally. It is to me, we in a bear market. The S&P 500 is down. I took off my I had a credit spread in the NASDAQ. I took it off today for profit. Let's see. What did I do? I don't even know if it's showing where I took it off at. Yeah, it was like $47 a day, but it was already up another like 30 or $40 from last week. And then it went down some more, so I took it off. Right. And then I opened up another another call spread in the SPY. So right now I think I got a call spread in the SPY, and then I also have a butterfly in the SPY. So I'm super bearish in the market, and I'll show you why I'm bearish, just so you can kind of get a a glimpse into why I'm bearish. You see the crossover right here of my moving averages, the 12 and the 26. You got that crossover. It pulled back and tested that area, and then pulled and broke this low. So that's a bear flag. Down, back, break. And I got a book over here. Oh, let's see. The Elliott Wave Principle. Let's see. Got this book right here. I'm a big reader. I took the cover off because I got tired of dealing with the cover. But it's called The Elliott Wave Principle by Frost and Prechter, right? And most people that study Elliott Wave analysis, what this is the go-to book. So I'm gonna say it again: Elliott Wave Principle by Frost and Prechter. So that's a real good book. And basically, if you never heard of Elliott Wave, basically make it short and sweet. The market moves in impulses, right? So you get and these impulses can be tracked in the market. Like you can count these waves and you can kind of see, what you can kind of predict, and it'll show you like where the next move is going to happen. And it's kind of way for me, I use it as places that with Fibonacci, I use that to project where I think the market will go and when to enter and exit trades and take profits. So whenever you get a big move, either up or down, and it pulls back and then takes out that low, classic bear flag. If it was in the opposite direction, it would be a bull flag. And I'll show you. Matter of fact, I think I'm gonna pull up and show you during the coronavirus right here, right? So see, this is the same thing that happened coming out of the coronavirus right here. You got, put this down. You got a down move and it just stopped, right? You got this big green candle right here. Up, pull back, boom, right? Up, pull back, boom. The moving average just crossed over and it's gone. And that was the beginning of this move. Look. Well, that was the one. That was one before. Here's the one actually. This is the coronavirus crash right here. But that was still one. Down. It actually gapped up here. Pull back. Boom. Same thing. And then you get your up move. And then look how far it went up. To me, this is a correction. Same thing. You got a down move, pull back, break. Right. So that's why. And then from the low to this, from high, low, and then this pullback, and then I project. So I got this going all the way down. When it's said and done, I got the S&P 500 all the way down at 340 before the end of this move. That's another, $90 off of the SPY before we even get a let up. Now, that doesn't mean that it won't reset after that, because it most certainly can. So, and that's why I think that this move isn't over. So that's the S&P 500. And all of these stocks you see over here in my watch list are part of the S&P 500. Facebook, Apple, Amazon, Google, Microsoft. These are the biggest stocks in the S&P 500. So I really see the market continuing to go down. You can, I don't see this. So there's no reason, in my opinion. So I'm not looking to buy any dips, unless it's something like short term. I'm selling out every rally. Like this would be a rally. This green day right here would have been a rally. So if tomorrow you get something to pull back up in here, I would sell it. I would use that opportunity to get short again on the pullback. We got too much risk in the market. We still got supply chain shortages. Go to the grocery store. Go to the grocery store and look at the shelves. If you're not buying canned goods right now, you crazy. Everyone should be buying canned goods. You should, stocking them up, saving food, um, putting stuff away. Go get you some beans. Go get you some canned goods. Get you some beans. Get you some dry beans if you can. Get you some navy beans. Get you some beans, some canned goods, and stock them up. I'm not saying. What are you saying? I don't know if anything's gonna happen. I think what I think. I hope what I think is gonna happen doesn't happen. I don't want to put negative things out into the universe, but it's better to be prepared. So, you're looking at the shelves. You all see them shelves in the grocery store. You see these shortages. You see shortages everywhere. You can't get chips. They for new cars, they got certain software they don't have. You can't get chips for PlayStation 5s. Um, I want me a PlayStation 5 too. I want to get one for me and my son. So, and I ain't trying to overpay. I don't want one that bad. I'm not paying 11, $1,200 for one. So, but yeah, so you got shortage, we everywhere. So, and another stock, I didn't even know this. I just found this out last week. Water is on the stock market. Start buying water. I'm not playing. I'm not lying. Water, I got that as one of the things I wanted to talk about just because I didn't even know this. I don't know what I was looking at. I think I was looking at CNB. I don't know what I was looking at. And I seen this ticker symbol, WTER, the Alkaline Water Company. And I said, man, water is on the stock exchange. We got you people. Look, people are make no bones about it. This is legalized gambling. I don't care what you say. People are betting. You taking a bet on whether the market goes up or down. And people gonna say, well, nah, if you're an investor, you're an investment strategy, man, whatever. Call it what you want, make you feel good. You got casinos, you got Caesars on here, you got Win ticker symbol. You got all these different stocks that represent gaming companies, Penn, DraftKings. Now you got games and stuff. Now you can bet on all kind of stuff. Call it what you want. Whether you buying stock and holding it for 5 minutes, or you're holding it for 5 years, you taking a bet. You think that stock gonna be up in 5 years. That's what you're doing. That's gonna cause a little conflict with some people, but not me. It is what it is. But I enjoy trading. So, but yeah, water is on the stock exchange. So you do with that what you want. Just think about that. You got someone on here that is profiting. I'm gonna dig into this company. It says up here it's in the NASDAQ. Water is still blowing my mind how you can trade water on the stock exchange. That means a whole lot of things. But so that's one of the stocks I wanted to. I don't really have. It's actually down. So I guess that's a good thing for people that's out there buying water, because you want the price to stay down. I don't want to see when the stock is up. I don't know what that'll look like as far as the world view of water. And I want to talk about Lucid. I still like Lucid. I'm still in Lucid. I'm holding it. Now I am hodling Lucid till it gets to my number anyway. Remember, my Fibonacci level for Lucid is 30. Actually, I can see it going up to about $37, but I won't hold it to the tip top. I'm out at $35. I'll be out of Lucid at 35, or I'll be out at Lucid below 16. So either I'm gonna take a L down here, I'm gonna take profit right here. So, and you can see like I said, I got my basic flag, I got my up move, my pullback. Anytime it pulls back in between this zone right here, this 38.2% or 61.8%, that's my little golden range right there. And it breaks this high, it flags up. So I got a low, a high, a low, and then a breakout right here. Boom. Once I get that, I start projecting. You can take profit here. You can take profit here. You can take profit here. Depending on when you seen the trade and when you got into it. Going into tomorrow, what I like tomorrow, the VIX was up today. So premium selling. It's ripe for premium selling. If you wanna I wouldn't be buying options right now. Just as me personally. You want to get hedges on. I think it's a little too late for hedges. You want to get an up move. If you want to try to get into a hedge or something like that, I wouldn't do it. I wouldn't try to put a hedge on right now. It's probably gonna cost you too much money, right? If you want to come out and you want to buy do like some, you want like a VIX, a trade in the VIX. Let's see. So let's say you want to come out. You say you want to buy some vol. You want to do like some type of. I'm gonna design a trade right now, which will be a hedge, and we'll see. What I'm in the VIX. I'm gonna come out about. Let's do. Say I'm gonna come right on over here and look at vol 94. I got 110 right here. If I'm gonna do anything, let's go in the next 43 days. Let's just see. Now, you got a lot of open interest. If you look over here, let me bring my little drawing tool up. I like to use this, and let's see what we working with right here. So if you look over here in this column, this is open interest, right? And you say, Ray, what is open interest? These are options. These are option positions that are already on, that are currently, like when you look at volume, these were put on today, right? And the ones that were put on today that weren't closed will be added to this number tomorrow. So you'll see this will change. Volume shows like that current day. Open interest is going to have like positions that were open before that day, right? And so you look over here, you got 136,000 trades over here, 64,000. Like they rocking and rolling in the VIX. So it's kind of, if I was gonna, right now the VIX is at 22.96. So you could come out here and say, you could buy, let's go to 40, buy the 40, sell the 50. So I got a $10 wide. Let's erase that. I got a $10 wide call spread, right? It cost me 55 cents to put this on. So, but it's $10 wide. So that means that it's going to cost you $55 to put it on, and you can make $945. So you take that 55 cents, subtract that from the width of the box is $10 from 40 to 50. So that means your profit that you can make is $10. You subtract what you pay, which is 55. That's going to leave you with $945. So you can make $945 on it. Now that's a low probability trade because we buying a 40, which is like a 23 delta, and then selling the 14. But this is a hedge. So you're buying something like this. Basically, if the market continues to sell off, you're going to get a increase in vol. So that would drive the VIX up. And if you get the VIX up into this area, then you can sell out of this spread and take profit, right? So ideally, when you do hedges, you don't want the hedge to become the risk. Right. So you're only doing this because you have a long portfolio and you would like for the market to continue to go up. But if it doesn't, you'd like for something to kind of like stop your hemorrhaging, like, so you're not losing as much money. Now, also what I would do, so with me buying this spread to finance that so that I wouldn't lose those $55, I would probably come over here and do something like, let's sell the 25 delta and buy the 15 and buy this. So That's giving me a 75-cent credit. So what that means is I want to get this to where it's 0. So let's not sell the 20. So you got to kind of mess around with it. Let's go to the 18. If I sold the 18, bought the 14, what about the 13? Staying the same because you ain't getting nothing for that. So let's go back up to the 19 then. Sell the 19, move this back up to the 14. Let's move it back up to the 15. Oh, let's do the 16. So right around in here, you're collecting about a $20 credit, right? So what does that mean? That means that this shot right here is almost like a free shot, right? So what I did was I bought a call spread and then sold a put spread to finance that so that I wouldn't have to pay the $55. Now you say, where's my risk? Your risk, I still have, because I collected a 20-cent credit, right? So if the market doesn't go below 19, I'll keep this 20-cent credit, right? But then you could lose the 55 cents that you pay here. And so if we put this on the analyze tab, it's going to show you where you analyze this trade. Let's see. Single sim. I don't want to set the slices to break even. Our expiration is November 17th. So we got to go out to November. I'm going to change this right here. So basically, all it's showing is that you want to see the market go. You want the market to continue to go up. And if you look over here, you're not going to lose any money until, let's see. You don't lose any money until the market comes, because remember, you sold the 19. So as long as it's here, you keep your $20 credit. Once it breaks down here, then you start losing money. So it's a bullish trade, and you want the market to stay above 19 on the VIX, right? But if it stays in this range and it doesn't, and let's say it never gets up to the area where you bought the spread, you keep the $20. And so that's one of the things about doing, but you don't have to do that. You can also just you can delete that and then just go with, what I would do is just do it another way. It's just do the spread. Pay the $55. Buy that. Buy the 40. Sell the 50. And that's your hedge. So if the market just goes crazy, then you're actually gonna have, you risk $55 to make 945, which really you ain't gonna make. It would have to really blow through this spread, like something happened in the news just hit and it just take off. Market keep going down and it blows through this spread. Then you could still, I could see you making a few $100 though. And then if you, depending on how large your portfolio is how many of those you would buy, right? So you could buy one, you could buy, if you want to do two of these, you could do two. You could up the contracts, right? So instead of doing one, you could do two, depending on how long you are. So that's a great way to do a hedge. And if you don't, like I said, if you don't want to if you don't want to if you don't want to pay for this option, because a lot of people don't want to pay for options for what, people just don't like buying options. I said you can come over here and mess around and try to get it to where, see right here, you're only paying $10 because you're selling a credit spread over here. Now you still got risk over here in this credit spread, right? Because it's a $3 wide. So you can lose those $300 over here if it comes down below that, right? But if it stays like where it's at, you would just lose the call spread and then keep. You want to try to get it to a credit. It's a small debit right here. You don't mind paying $10, but I wouldn't want to pay anything. So I would do something like that. Like I said, I would do that. I get a $20 credit, and I'm still bullish. I'm kind of like double bullish though. I'm bullish over here on the call spread, and I'm also bullish over here on the credit spread. So that's another way of doing that too. I actually like using the analyze tab on Tastyworks. It looks a whole lot better on Tastyworks. It's a whole lot easier to they show you exactly everything. You have to kind of manually do it over here. You got to manually do it over here. Think or swim. But you can see that it's a bullish trade right here. This magenta line or purple line, that's the arc right there. That's letting you know that it's bullish because it's going this way instead of coming this way. And this is your vertical spread. And then as long as it continues to go up, see, I'm panning to the right. Let me see if I can make this. And and so you got two verticals. You got one here, and then you over here. So as it continues to go up, you can see the market. You can see how much money you make down in the bottom left-hand corner. So, but like I said, I wouldn't do something like this. This is a custom spread. You can search all over YouTube and you ain't gonna find nobody putting nothing together like that. And when you look down here at the bottom of my trade tab, you see it say custom. It's custom because this is kind of like a VIX vol spread. And this is just something that you do like as a hedge. And so I don't know what made me think about that is I also have an Upwork profile. And so on Upwork, a guy was on there. He wanted somebody to give him a hedge. And so I applied for it. It's kind of like a freelance thing. So I am on Upwork and I charge like $50 an hour if you want like some personal, one-on-one coaching. I got all kind of trades like this. I can design. I can whip you up one real quick. Something like that. So, and like I said, this is just a hedge. So if you just got like a little small account where you just buying a few stocks here and a few stocks there, you don't mess with nothing like this. This is for somebody that's probably got like I don't know, you got at least like a $25,000 account, and you looking to shave off some risk. It's another way to shave off some risk if you saying, hey man, that's a little too complicated for me. Come into the spy and sell some calls, right? So you got a big portfolio and you got all these long positions in stock. And if you long right now, you're getting hit. And I'm not getting hit in this and my long portfolio. I don't even pay attention to it, to be honest with you, because it's a long portfolio. I'm not looking to do anything with it. So that's why I'm shorting this one. But in that portfolio I'm long gold. And what's the one thing if you've been following me, I've been telling you, look right here. What's up today? Gold. So I'm in gold stocks. So I'm buying gold stocks. Another way is if you want to get long utilities. Utilities have been beaten up, but it had a big green candle today coming up out of look at it, was oversold and it broke up out of on the RSI, it broke out over 30. So that's why I said if you look over here at Facebook, it just hit the oversold area today. So that's why I say you might get a bounce like similar to that of XLU. XLU is the utilities. The utilities, is something that kind of moves. If you got a down move, the first thing generally that's gonna start going up after a down move would be the XLU, the utilities. That's one of those flight to equality sectors that people like to try to pile into. But when everything's getting hit, everything's getting hit. So But that's when you start trying to look at to like other alternatives, like look at the XLE is up. That's energy. And that's gonna be follow the path. Look at that. It's been up. So there have been things that you could have gotten into that kind of to keep your portfolio from going down. And energy is up because what? You got oil. Look at oil. So when oil is up, you're gonna see the XLE, which is your energy sector of the S&P. Um, you're gonna have oil. That's gonna be the XLE is gonna be up. So whenever you hear them saying oil, try to find stocks in the energy sector around oil. I imagine if I looked up natural gas, let's look up natural gas. Even though I don't trade it that often, look at natural gas. Look at it. Oh, another energy. This is an energy future. So you saying, man, you saying Ray, those are futures. I ain't really into futures, but this future right here has a ETF. I think it's UNG. Look at it. So this is the IV rank is at 100. Now the reason why the IV rank is at 100 in something that's commodity based is because it's a little bit opposite. Commodities crash up when equities will crash down. So you'll see the vol in something like natural gas, um, what is it? Oil, gold, copper, things like that, like your commodities, even bonds, they crash up. You'll see them crash up, and when I mean crash up, the implied volatility on equities tend to go higher as the market goes down. But as commodities go up, the implied volatility tends to expand as they go up. So you can, but this is a way, hey, looking at it though right now, I don't know if I like it if I want to get high. I mean, if I want to get long with it, I don't get high. If I want to get long while the market's up in this area right here. But these are some things that you can do to kind of keep instead of watching your portfolio just go down, you can look to commodities, but look for stocks in the energy sectors. I just gave you some ETFs, the XLE, and the XLE I think pays a dividend. Matter of fact, I know it pays a dividend of 59 cents, a quarterly dividend of 59 cents. That ain't bad. So there are things that you can get long where you can get out of some of these equities if you wanted to. Now, if you're saying I'm just gonna hold, I'm gonna hold. I ain't selling. You might be holding. Cause I'm telling you, you might get an opportunity on a pullback. Remember I told you guys, I've been looking at Apple. I got a video specifically on Apple, and I told you, I said, if I was going to buy Apple, I would not buy it before it got here. It's at that area. Now that still I'm not looking to buy anything right now. It's too much risk in the market for me. I'd rather just continue doing what I'm doing, selling my spreads, selling my credit spreads, and just chilling out. When it pops up, when I see Apple pop up a little bit, I might come on and sell it. Hit that like button, hit the subscribe button, so you'll see the trade. You'll see me do it. You might come in a little late, like this trade I put on today in the SPY. You can get in this trade, guys. Like you can get in this trade. Ain't nothing if you want to at your own risk. Now, gotta put that disclaimer out there. Come on here like, he told me to do it. I'm not your financial advisor, but I am that guy. So you could come on here and these two separate trades. I'm super bearish. So I got a butterfly. I got a broken wing butterfly. Right here you see I'm long the 50 delta. This is on the put side. This is a bearish trade. I sold the 39. I sold two of these, bought one of these, and then broke the wing. So I think I'm gonna do a separate video to talk about that. If it was an equidistance butterfly, it'd be a regular butterfly. But by breaking the wing, I broke the wing because I actually think that the market could blow through this spread. So if it blows through this spread, the put spread of it will continue to make money, right? And if it pullbacks and retraces and lands somewhere here, it's gonna make even more money on the butterfly. This is an excellent time to be trading. I'm telling you, when you know how to trade, you want the market to sell off. You want it to go down. I know that sounds crazy, but this is the easiest time to trade. Don't try, in my opinion, don't try to pick stocks to buy. Sell the crap out of them. And when I say sell them, I'm not necessarily talking about going in and shorting the stock. Sell iron condors. Sell iron. Sell strangles. Sell everything. You can do ratio spreads. Sell put ratio spreads. Like if you want to get long, sell a put. Sell a put, and then when you get the pop, get out. Manage these positions early. Don't hold them to expiration. I'm 46 days out. Over here, I sold the 24 Delta, bought the 17 Delta. This is a $5 wide spread. I think I collected like $1.41. I'm risking $359 to make $141. You be like, man, I don't want to risk like that. Man, I got probably like an 80% chance of making 50% profit. I'm putting these on and I'm taking them off in a day or two. And so right here, sell the 24 Delta. Let's see what it's selling for right now. If you're seeing this video and you did it tomorrow, you can collect $1.36. That means I'm buying. That means if I did it like right now, the market's closed, but I did it right now, the market was open, I buy this back at 50% of what, 70, what was it be, $70? Buy it back at like 68. I don't know. Buy it back at 68 cents, collect it and keep the profit. So if you sell something to open, you got to buy it back. So that means I would be selling this for $1.36. Somebody, market maker, somebody buy it. Then I buy it back once it depreciates in value. So it's kind of like, think of it like this. It's like selling somebody a brand new car, right? They drive it off the lot. They drive it for a year. They bought it from you. You the dealer. They bought it from you for $30,000. They drove it off the lot. 2 years later, that car worth $23,000. You go back to them and say, "Hey, I want that car back. Got good mileage on." You give them the $20,000 or 22, whatever, $22,000. Let's just make it easy math. You give them $20,000. You sold it to them for 30, bought it back from them for 20. What you got? You got 10 grand of equity in it or whatever. Same thing with these options. I'm selling it for 136. I got time on my side, and implied volatility could decrease, and it could go down. 3 ways to make money. Time goes by, it's gonna automatically depreciate on time value. The vol could crush. Volatility goes down, it'll depreciate in value. The market could go down some more, and it'll go down in value. Same thing. And if I want to close it, I can, or I could roll it down. I could roll the call spread down and then collect premium, keep the position on, and kind of like manage it. That's where you make your money in options, managing the trades. And when you learn how to trade like this, you don't care what the market's doing. You don't care. You just that's why I get things where people be like, "What you think about such and such stock?" And I'll pull up a stock and I'll chart it up for you. Like I'm in Lucid, I'm long Lucid in another portfolio, so I actually want it to go up. But let me show you the trick part about Lucid. Lucid goes up. Let's say it goes up and hit my target. Not only am I going to sell out of this position, not only it get up to where I wanted to get to 35, not only am I going to close my position and take my profit. If I'm right, I could be wrong and it can go down, I lose that money. But it go up right here, I'm going to collect the profit. And let's say it get up into this area. I'll get short right in here. I'll buy a put spread right in the face, step right in front of that train and trade it back down to the other side. I don't care. That's the fun part about it. So this one have been one of my longer videos because I did the football talk. I'm gonna start doing those a little bit more. So hang around, chime in. If you're a football person and you want to get into this, follow me. Hit me in the comments. Let me know, like, you're a new guy. You always want to get into trading. You want to know basics. Give me some topics and I'll do them. Talk to me about, hey, how to set up an account. If I get enough people to want to set up an account, man, I'll come on here and set one up. I've been thinking about setting one up. I think I got one with Webull, but I ain't put no money in it. And so I might mess around on a platform. So, I do it with you. We'll buy. I'll walk you through buying your first share of stock. I ain't got no problem with that. So I hope you guys got something out of this video. I really enjoyed this. It's one of my funnest ones. I love talking football. So I'm gonna do a whole lot more of that in the future, but I'm always give you that market talk. So with that, I'm out, man. Peace.